Right. Just students, just a few formalities first of all. Just the normal thing. Your notes has been uploaded already, so it is to your advantage to, of course, download it, and then we can work from that. And then just to complete your attendance register. And today is our last lecture, which is lecture number 8. And then also in the chat, Bronwyn has posted there the link to the recordings as well as the notes. And in your preparation for the exams, make sure that you go through everything so that you are fully covered then for your exams. Right, in today's lecture, we are going to focus on the property, plant and equipment, which is study unit number 11, and it deals with asset realization. So let us first of all go to our notes, and I'm going to explain to you the notes there. So into your notes for asset realization. When we are talking about asset realization, students, then we say this section deals with how to dispose, how to sell a non-current asset. So when we talk about the selling of a non-current asset, it will be vehicles or equipment or machinery or furniture, any non-current asset that you are selling. So from an exam point of view, you must be able to do the journal entries to record the asset realization. They can ask you to do ledger accounts, and you must be able to do the note for property, plant and equipment. And I'm going to work through the entire question here today, and I'm going to show you how to record all of these things here. So whenever we deal with asset realization, there are certain steps that you need to follow for your asset realization. And these steps will include the following. Follow your notes. In step number 1, I'm saying that if you are disposing, selling an asset during the course of the year, you must now account for the additional depreciation. Additional depreciation since the beginning of the financial year until the date of the asset realization. You must account for that period of time. So if your financial year started on the 1st of January and you are selling the asset on the 30th of June, there's a 6-month period. In that 6-month period, you have used the asset. And because you use the asset, the value of the asset has decreased for that 6-month period. And that is what we recall, and that is what we now call the additional depreciation. So as far as the additional depreciation is concerned, you must record the additional depreciation in step number 1. How do we record it? To account for depreciation, debit depreciation. It's an expense. Expenses increase on the debit side. Debit your depreciation and you credit accumulated depreciation. So your accumulated depreciation is credited. And that is your step number 1. We're moving on to step number 2 now. In step number 2, we say we transfer now the accumulated depreciation on the asset, the total written off to date. We transfer that to an account that we call the asset realization account. Now, the asset realization account in your ledger, it is not an account that resort under assets or equity or liabilities or income or expenses. It's not one of those accounts. This account is classified as an intermediary account. It's an account that is created just to assist you in dealing with the asset realization. This ledger account also only exists in your books for 1 day. After the asset realization, that account don't exist anymore. So there's no balance for your asset realization account. It's an account that is only created to assist you with the actual sale of the asset. So in step number 2, I'm transferring the total accumulated depreciation, and I transfer that to the asset realization account. Now, accumulated depreciation is classified as what we call a contra asset account, an asset account with a credit balance. To transfer that, accumulated depreciation must decrease. I debit my accumulated depreciation. So you debit your accumulated depreciation and you credit your asset realization account. That is your step number 2. Step number 3, now we transfer the cost price of the asset. Remember, now we are selling a vehicle or equipment or furniture. Your furniture must decrease, which means that you must credit your furniture account. So you credit the asset account and you debit your asset realization account. So in step number 3, we take the cost price of the asset and we transfer that to the asset realization account. Okay. In step number 4, now we take a look at how did we dispose of our asset. And basically, there are 3 ways in which you can dispose of your asset. You can sell your asset for cash, or you can sell it on credit, or you can trade it in. Those are the 3 ways in which you can dispose of your asset. If you are selling your asset for cash, you sell your asset for cash, it's an entry between bank. It's an entry between bank and asset realization. Okay. Richard, can you see?
Yes, we can see now.
Okay, but I unshared me now. I didn't work from the note. I was just explaining. Okay. Right, students, just please bear with us on this. We've got a few problems that we need to sort out. Okay, so I'm continuing. Let me then just rather go to the note now. Right, so I'm on to step number 4 now. In step number 4, like I said, we take a look at how did we sell our asset, and we must now record the proceeds from the sale of the asset. So you can sell your asset for cash, and if you sell your asset for cash, debit the bank account and credit asset realization. If you, however, sell the asset on credit, somebody owing you the money, you sold the vehicle on credit to somebody, and that is then trade receivables. Then you debit your trade receivables and you credit your asset realization. If you, however, trade it in, then you debit your trade receivables control and you credit your asset realization. So if it's cash, it's the bank. If you sell it on credit, it is trade receivables. If you trade it in, it is trade payables. That is how we deal with step number 4 to record the proceeds from your asset realization. We're moving on to step number 5. In step number 5, we calculate now if we have made a profit or a loss on the sale of the asset. If we have made a profit, then we deal with an account called profit on sale of asset. And profit on sale of asset is classified as an income account. We must therefore credit your account profit on sale of asset and you debit your asset realization account. If you've made a loss, then you deal with an account called loss on sale of asset. Loss on sale of asset is an expense. expenses increase on the debit side. So you will debit your account, loss on sale of asset, and you credit your asset realization account. So that is how you will deal with the 5 steps of asset realization. On the notes there, I've got a page 6, and that is when you need to calculate what is the depreciation expense at the end of the year on the remaining assets. Leave that one for now. I'm going to explain that one now, or after we've done the exercise, I will explain that to you. At this stage, we are going to focus on the asset realization. We are selling an asset, and if we sell an asset, there are 5 steps that you must follow, right, for your asset realization. So let us take a look at an activity, and we are going to work through an activity where I'm going to explain to you the steps involved with asset realization. Go now to what is your workings now. Right, so let us continue now. First with the example that I've got here for you. On page 2 of your notes, there is an example. I hope everything is fine and you guys can see that one. I'm just going to do something else here. Right, can somebody just give me a thumbs up there just to say that whether everything is okay?
Yes, it's okay, sir. Thank you.
Okay, right. The following information was taken from the books of Sari Stores on the 31st of December 2017. So the 31st of December 2017. And then they give you a list of balances. The vehicles at cost price is 360,000. And that is the value of vehicles, as you can see, on the 1st of January 2017, which is the start of the financial year. Accumulated depreciation on the vehicles on the 1st of January was 104,000 Rand. B will give you your additional information. Under your additional information, they tell you a new vehicle was purchased for cash on the 1st of July. And they also give you the rate of depreciation. Depreciation must be provided for at 20% per annum on the cost price. Under number 3, they tell you an old vehicle with a cost price of 140,000 Rand and accumulated depreciation of 48,000 Rand on the 1st of January was sold for cash on the 1st of October, and it was sold for 80,000 Rand. Okay. Then under number 4, they tell you that you must make provision for the depreciation on the vehicles at the end of the financial year. Under your required, they ask you to do the journal entries, to record the depreciation, to do the ledger accounts, and also the note for property, plant, and equipment. So I'm going to take you through this question now, and we are going to do the solution now. And I want you to go now to what is indicated then as your workings for this particular question. Right. Your financial year has started on the 1st of January. It ends on the 31st of December. And the date of the disposal is on the 1st of October. Right. Based on the information given to us now in the question, On the 1st of January, the cost price of the asset that we are selling, cost price of the asset that we are selling a vehicle which had a cost price of 140,000 Rand. Accumulated depreciation on this asset on the 1st of January was 48,000 Rand. And therefore, the carrying value on the 1st of January was an amount of 92,000 Rand. Carrying value is cost minus accumulated depreciation. Students, I'm just taking you through the process now to explain to you, first of all, what is happening in this question. So, during the course of the year, from the 1st of January up until the 31st of October, that is a 9-month period. And in that 9-month period, we have used the vehicle for our own purposes. Therefore, we must account for the depreciation on this asset that we have used for the 9-month period. To calculate the depreciation, we say now the depreciation will be calculated as follows: 140,000 at 20% per annum, but only for a period of 9 months. So we have now, in that period, since the start of the financial year, up to the date of the asset realization, from the start of the financial year up until the date of the asset realization, from the 1st of January to the 1st of October, there will be additional depreciation. And your additional depreciation will amount then to 21,000 Rand. So if you take a look at the situation now, what is happening on the 1st of October? On the 1st of October, we are selling an asset which has cost us 140,000 Rand. And now, accumulated depreciation on this asset. Remember, at the start of the year, it was 48,000 Rand. There is a further 21,000 Rand of depreciation that must be added onto accumulated depreciation. And on the date of the asset realization, your accumulated depreciation is now 69,000, which is the 48 plus the 21, resulting in a carrying value. And your carrying value now on the date of the asset realization is therefore 71,000. Carrying value is once again cost minus accumulated depreciation. So if you are now going to take a look at this asset now, you will see that the carrying value is 71,000. We are selling it at 80,000 Rand.
Rando.
And because okay. Right. We start again. On the date of the asset realization, the carrying value is 71,000. The selling price is 80,000 Rand. And because we are selling it for more than the carrying value, there is a profit of 9,000. In your calculations, if you have now seen that you have made a loss now, you have sold it for less than the carrying value, then you must, of course, account for the loss then on the sale of the asset. But in this example now, students, we are making a profit then on the sale of the vehicle. So at this stage, guys, I just want to know, are there any queries up until this stage now? Have you got it? Do you understand what has happened now? Here's a question. Can we not subtract the 21,000 Rand from the carrying value of 92,000 Rand? We can do that. However, in terms of our entries and how we record it, it is not possible for you to do it like that. If you want to have a quick fix situation or a quick fix solution, you can say our carrying value at the beginning of the year was 92,000 Rand. It will decrease by another 21,000 Rand, and then your answer is 71,000. Your answer is correct. Answer will be correct, but there's a process that we need to follow. And in that process, we must also record entries in the journal and in the ledger. But 71,000 can be calculated as 92,000 minus the 21,000. Okay. As a Asipile, where did the 69,000 Rand come from? 69,000 Rand is the carrying value. Now, what is carrying value? Carrying value is cost minus accumulated depreciation. Your question on the 69,000 Rand is the accumulated depreciation. At the beginning of the year, accumulated depreciation was 48,000 Rand. Now we have added a further 21,000 Rand. So accumulated depreciation on the 1st of October is 69,000, which is the 48,000 plus the 21,000. I hope that answers the question, Azafile. Right. Any other queries before we continue?
Yes, sir. Good morning.
Good morning, Shoot.
Yeah. Can I please just see the screen again that you were just on? If that's okay.
Okay, we can do that.
Just have one more look at it.
I think it's that one.
Yeah, just slide up a little.
Is there a query, a question on that one?
No, I just wanted to check something, that's all. Thank you.
Okay, all good? Right.
Yes.
So, okay. Right. So I've taken you through the explanation now of what has happened. I'm going to show you now how to record the transactions now in the journals and in the ledger. And when I do the recordings now, the recordings of the transactions in the journals, I'm referring you to the steps, and we are going to follow the steps now. Okay. So let me just take you to the workings again. Right, so I'm first going to record the entries in the general journal and show you the journal entries. Remember, the question asked you to show all the journal entries on the 1st of October, and the 1st of October was the date of the asset realization. And when you sell an asset, there are 5 steps that you must follow. So in your journal, we will have the following. Step number 1, account for the additional depreciation. So my journal entry will be debit depreciation, and I credit my account accumulated depreciation on vehicles And that journal entry is to record the 21,000 Rand, the additional depreciation, which is my step number 1. In step number 2, I transfer the total accumulated depreciation on the asset to the asset realization account. Accumulated depreciation must decrease. I debit my account, accumulated depreciation. I debit that account, and I credit my account, asset realization, and the total depreciation. Remember now, as a previous question, we started off with 48,000. There was a further 21,000 Rand, and my total accumulated depreciation to be written off on the asset that we are selling is therefore the amount, right? And we are transferring 69,000 Rand there. Step number 2, transfer the total accumulated to the asset realization account. The third step, we're going to transfer the cost price now. Remember the cost price of the asset? We are selling an asset which has cost us 140,000 Rand. To transfer the cost price of the asset, the value of our vehicles must decrease. We don't have that asset anymore. So to decrease the value of the asset, we will credit the asset account, which in this case is vehicles. So to account for this now, I debit my account, asset realization, and I credit my account. The vehicle account must be credited because our vehicles decrease. We don't have that vehicle anymore. And the cost price is 140,000 Rand. In step number 4 now, I must record the proceeds on the sale of the asset. And we sold the asset now, 3,000 Rand. And it was a cash sale. Therefore, I will debit my bank account because the money in the bank account will increase. Debit the bank account and I credit my account, asset realization. Debit the bank, credit asset realization, and the amount of the sale was 80,000 Rand. Sale was therefore 80,000 Rand. So that will take care of our first 4 steps now with asset realization. And in the last step, we are going to record the profit or the loss on the sale of the asset. On our calculations, we have made a profit of 9,000 Rand. Profit on sale of asset is an income account that must be credited. I will now debit my account, asset realization, and I credit my account, profit on sale of the asset, and the amount in this question is 9,000.
Okay.
Because we have calculated, I'm going to be with you now, we have calculated the profit on the sale of the asset to be 9,000. And this year, what I've completed now is the journal entries for the asset realization on the 1st of October. And with your asset realization, you follow the 5 steps there. Right, I am entertaining questions now. Is Baden all good?
Yeah, I'm all
Sorry,
good.
sir. Can you just
Okay,
show me
I've
again
got a
what was the profit?
question.
Sorry, sir, what was the profit again?
The profit was 9,000.
Okay, so then my asset realization account must balance 149,000 credit and debit at the end of the day.
Always. Okay, if it doesn't balance, then there's a problem.
Okay, sir. Thank you very much.
Okay, right. So that was the first part. I've taken you now through the journal entries. I'm not going to show you how this will now be recorded now in my ledger accounts. If you do the ledger accounts, how are you going to do this? I'm taking you back now to the workings. And in your workings, we are now going to take a look at our ledger accounts that I've got there. The vehicle account, remember, started off with an opening balance of 360,000 Rand. That is the value of vehicles. All our vehicles together is 360,000 Rand. From the question, you will see that on the 1st of July, you bought a new vehicle, and you bought a new vehicle for the amount of 160,000 Rand. Your accumulated depreciation on the 1st of January, remember accumulated depreciation, a contra asset account must have a credit balance, and the opening balance in your accumulated depreciation account. This is the accumulated depreciation on all our vehicles, and on all our vehicles, it was the amount of 104,000 Rand. Now, if the question asks you, just do the ledger accounts, you still go through the entire steps of asset realization. Step number 1, provide for the additional depreciation. You debit your depreciation account with accumulated depreciation. And if you provide for the additional depreciation, we had seen that that was the 21,000 Rand. So the journal entry is debit your depreciation account, credit accumulated depreciation. So we go to our accumulated depreciation account, and on the 1st of October, credit this account with depreciation, and the amount applicable here is 21,000 Rand. That is step number 1. I debited depreciation account and I credited my accumulated depreciation account. Step number 2, I must transfer the total accumulated depreciation on the vehicle to the asset realization account. I debit my account accumulated depreciation. I debit accumulated depreciation with the asset realization account.
Hey, Lucy.
And the amount in your that transfer to the accumulated depreciation account. The total accumulated depreciation written off is 69,000. You will now go to your asset realization account. You will have an asset realization account, and on the credit side of your asset realization account, you will now have an entry called accumulated depreciation, and the amount is 69,000. And that is to record your step number 3. Step number 2 now, sorry, step number 2, we transfer the accumulated depreciation from the accumulated depreciation account to the asset realization account. Debit accumulated depreciation, credit your asset realization account. Your next step, we're going to transfer the cost price. And if we transfer the cost price, our vehicles must decrease. Credit the vehicle account now on the 1st of October with asset realization. And the cost price of the asset must decrease with 140,000 Rand. We don't have that 140,000 Rand anymore. Decrease it now. And your asset realization account will have a debit entry. Asset realization will have a debit entry for vehicles. And the cost price that is transferred in here is 140,000 Rand. In step number 4, we take a look at how did we dispose of the asset. The asset was sold for cash. We will debit the bank account and you credit your asset realization account. So your asset realization account will have a credit entry. Contra account is bank and we sold it for 80,000 Rand. The bank account is not required, but the bank account will have a debit entry, right? But that is not required. We're only focusing on asset realization. So we credit our asset realization account there with bank, 80,000 Rand. In the last step with the asset realization, we must calculate to see whether we made a profit or a loss. We have calculated the profit of 9,000 Rand. To record this now, debit your asset realization account now with an account called profit on the sale of an asset. Profit on sale of asset is debited. And we have calculated the amount to be 9,000 Rand. And you will have a ledger account called profit on sale of asset. And that account must be credited. That account must have a credit entry. We are not required to do that. The question only wanted us to do these 4 ledger accounts. Your asset realization account, as Krista has pointed out now, this account must now balance. The debit side must be equal to the credit side. If you add up now the debit side, you will see that it is 149,000 Rand. And the credit side is also 149,000 Rand. So your asset realization account must balance. The debit side must be equal to the credit side. If that is not the case, then we are having problems. Then we made a mistake somewhere. Okay. Right. Any students, any questions that you've got now on the ledger accounts? I've taken you through the steps of asset realization. There are 5 steps that you must follow. I've shown you the entries in the general journal, and I've showed you the entries in the ledger. Any questions?
Yes, I wanted to ask the top section, that's 360,000.
Yeah.
Can you just explain that part again?
Okay. The 360,000 is the cost price of all our vehicles. So we may have 5 or 6 different vehicles. And when you talk about the cost price, the opening balance in the vehicle account, it is all our vehicles, and we are only selling one of them. I hope that is clear, Baden. The same with accumulated depreciation. The opening balance of 104,000 Rand is the accumulated depreciation on all our vehicles. Baden, happy?
Yes, thank you.
Okay, right. I am now going back to step number 6, where we are now going to calculate the depreciation on the remaining assets. Okay, the depreciation on the remaining assets, and this is the one that is sometimes giving quite a lot of problems now to the students. So let us take a look at what is the situation at the end of the financial year and how are we going to calculate the depreciation. Right. Remember now the depreciation on the asset that we sold. And how did we calculate that depreciation? Remember the asset that we sold had a cost price of 140,000 Rand. We had to provide for depreciation at 20% per annum. But we had this asset only for 9 months, and therefore the depreciation amount on that asset for the 9 months period, we have calculated that already to be 21,000 Rand. Now, we started the year with 360,000 Rands worth of vehicles. And as the student has just asked now previously, that 360,000 Rand is all our vehicles together. So we started the year with Okay, is there a question? Just hang on.
I'm just a bit
I'll be with you now. Right. Asipile, is there a
Can you
question?
hear me?
I can hear you so well.
Yeah. I'm just confused with the 20%. Why do we write it as 20%? When I use the 20%, then I get it instead of the 20.
Okay, Azipile, I cannot hear you so well. I think, can't you just type up in the chat, just put your question there and then I will answer it, please, man. I can only hear some of the stuff that you are saying. Okay, so please go to the chat and you just put it there for me. Okay, thank you. Right, we continue. So, the remaining vehicles is 220,000 Rand. All clear on that 220,000? Remember, we started the year with 360. We sold one for 140,000 Rand. So the remaining vehicles is 220,000. And to calculate the depreciation on the remaining vehicles will be 220,000 at 20% per annum. And we had that for the entire financial year. So we account for 12 months depreciation on that. And the depreciation expense on our old vehicles, our remaining vehicles, is therefore 44,000 Rand. Okay, any queries on that one? Okay, many students are normally struggling with that one because they do not understand that we started the year with 360. We started the year with 360. We sold that one. One of them was sold. That has cost us 140,000, and the remaining is therefore 220. My advice to you take the 360 that we started and split that into old vehicles and vehicles that we sold. So we started the year with 360. The sold vehicles is therefore 140. The other vehicles, which is now old vehicles, which we had for the full year, that is then 220. So the 220 you depreciate for a full year because we had it for a year, and the 140, we only had that for 9 months. So you only depreciate that for 9 months. Okay. Yes, a question. So we don't subject the depreciation value. We subtract the original purchase price. Okay. No, it is not the depreciation value. My suggestion to you is my suggestion to you is that we split the assets. Let me just attend to Athen Corsi quickly. Please go back to the screen as you're explaining. Okay, I can do that for you. Right, so we started the year with 360,000 rands worth of assets. I want you to understand it as follows. We started the year with vehicles of 360,000 rand. We sold some of those vehicles, and the value of the vehicles that was sold was therefore 140,000 rand, which means that the remaining vehicles, or let us call that the old vehicles, must therefore be the amount of 220,000. The 140,000 must be depreciated for 9 months only because we had it only for 9 months. But the 220 we had for the entire year, and it must be depreciated for 12 months because we had that for the entire financial year. I hope that clears up that part now. Okay, so let us take a look at this calculation now further. And now we say, okay, just Charlotte has got a question here. Is the depreciation of the sold vehicle recorded as an expense to the profit or loss account? You are absolutely correct. It goes to the profit or loss account, but we are going to take all the depreciation together. I'm going to show you now how we are going to count for that. Okay. After 2 years of getting it incorrect, I don't understand what you mean by that. Okay. Asipile, why do we divide by 20% by 20 instead? Why do we divide by 20 instead of 20%? When I use the 20%, the answer comes out different. No, Asipile, the answer must be the same, right? If you take 20 times 20, divide by 100. Not divide by 20, times 20, divide by 100. You can work it out like that. Or if your calculator has got a percentage function, you can just put in 20%, but your answer is still the same. You must times 20, divide by 100. Okay. Ron Buchan, I don't get your question after 2 years of getting it incorrect.
Sorry, Professor. I meant for the past 2 years, I've always got that question wrong in the exams, but I finally understand it now.
Oh, okay. No, okay. That's all good. Okay.
Thank
You must
you.
always remember that this accounting, the more you do it, the better it will become. It doesn't mean that you must take 2 years. Eh? Okay. Sometimes a semester is good enough. Okay. Right. So, guys, I'm continuing. I am back onto my calculation. I have explained now to you the fact that you need to split your opening balance into items that you sold and some items that you had for the entire year. But besides that, we also purchased a new vehicle. And the new vehicle was purchased for 160,000. We still depreciated by 20% times 20 divided by 100. But this asset was purchased on the 1st of July and we own 6 months. So you must provide for depreciation only for 6 months, and your depreciation will then be on the new asset will therefore be 16,000 rand. Okay, all good on that one? That is now the depreciation on the new item that was purchased. So if you go back to the notes, remember I told you about the 5 steps with asset realization on page 1 of your notes. But there is also a step number 6, where you must bring into account the depreciation at the end of the year, the depreciation at the end of the year on the remaining items. So I am going to take you back now to the journal entries. And we are now going to record the journal entry for the depreciation at the end of the financial year. So to account for the depreciation, we will now say in the journal, this part of the journal entries there, on the 31st of December, I must provide for depreciation on my remaining assets. And to do that, I debit depreciation and I credit my account accumulated depreciation. And the depreciation on my remaining items, remember, we have split it now into 3 sets of assets. Let me just go back there and get that clear to you. Remember, we have got old vehicles and the depreciation was 44,000. We sold vehicles and the depreciation on that was 21,000. Then we bought a new vehicle for 6 and the depreciation on that was 16,000. So if I must now provide for depreciation on my remaining assets, it is the depreciation of that one, the old stuff, and the depreciation on the new stuff. Not the one of 21,000 because I don't have that 21,000. And the one on the 21,000 Rand that has been recorded already. You will recall that that was step number 1 here in your journal. Debit depreciation, credit accumulated depreciation. The 21,000 Rand has been accounted for already. So on the 31st of December, if I must account for depreciation on the remaining items, it would be the 44,000 plus the 16,000. And I debit depreciation, the amount is 60,000 Rand. And I credit my accumulated depreciation, 60,000 Rand. That is the journal entry at the end of the year to account for my depreciation at the end of the year. If I take that information now to my ledger, I will debit my depreciation account on the 31st of August now with depreciation. And the depreciation expense at the end of the year is 80,000 Rand. I credit my accumulated depreciation with depreciation and the amount of the depreciation at the end of the year is 80,000 Rand. Right. Students, that will now take care of all the journal entries and all the ledger accounts. I had my 5 steps of asset realization, and I also had now, and I've showed you the recording, how to record the depreciation at the end of the financial year.
It's from Silver Laser. It's a 405 millimeter semiconductor laser with adjustable power supply.
Richard, can you please just mute your mic there for us, please? Okay. So let us continue now with our ledger accounts. We have now recorded everything in our ledger accounts. What I'm going to do now is I am now going to close off the ledger accounts, and I'm going to balance my ledger accounts now. Take a look at your ledger account now, the vehicle account first. The vehicle account, remember, we started off with 360. We bought another vehicle for 160. I add up now, I will get 520,000 Rand. On my credit side, I will also record the 520,000 Rand. I'm balancing this account now. And I will now have, at the end of the year, a new balance carry down. And the balance carry down will then be 520,000 minus the 140,000, which will give you a balance of 380,000 Rand. And on the 1st of January in the year 2018, we will start our vehicles off with a new balance. And the balance in your vehicle account is therefore 380,000 Rand. All good on that? That's the vehicle account. What about accumulated depreciation? Your accumulated depreciation has started off with a credit balance of 104. On the 1st of October, we credited this account with 21,000. And on the 31st of December, there was a further credit of 80,000 Rand. You're going to balance this account now, add up your debit side, and you add up your credit side. If you add up your credit side now, you will get an amount of 104,000 plus the 21 plus the 80,000, and that will give you an amount of 205,000 Rand.
Sorry, sir. Isn't the depreciation on the 31st 60,000?
You are correct, sir. Let me just see. I don't know why I've got 80,000. It is 44. Thank you very much. It is 60,000. Just the calculation error there. We have transferred 60,000 in here. It's 60,000. That makes the total wrong here also. That should be 185. Thank you for that. And my balance over here is then also 185,000 Rand, resulting in a, if I balance this account now, I will have a balance carry down and my balance carry down will be the amount of 116. So on the 1st of January 2008, 1st of January 2008, I will start my accumulated depreciation account with an opening balance, and that balance is 116,000 Rand. Right. My next account is my depreciation account. Remember, depreciation account is a nominal account. It don't have a balance at the end of the year. We had a question from a student earlier, which was, I think it was Charlotte. And Charlotte said that the depreciation expense for the year that we transfer now to the profit or loss account, because this account is closed off now, and that amount then is 81,000 Rand. So we transfer 81,000 Rand to the profit and loss account, which is the expense in your depreciation account. Remember now, your accumulated depreciation, your asset realization account has closed off. So there was nothing, no balance there. You can't have a balance there in your asset realization account. Right. I have now balanced my ledger accounts. Any queries, any questions on that one? As this one student, Charlotte, has indicated, the expense for the year is then on the 3 assets. And it's always easier, guys, to split it into the 3. You want to know what is the assets that you had for the full year, the assets that you had only for a portion of the year, and what is your new assets, the depreciation on the new assets. All good on? We move over now to the last part.
Sorry, excuse me, sir.
Yes,
Can I
okay,
just see that screen
yeah,
again,
no, you
please?
can go. What is that?
I would just like to see that screen again, if that's okay.
No, it's fine, not a problem. We can get that for you. Are you referring to the ledger accounts?
That's correct, sir. Thank you.
Okay, all good?
Just want to check it. Let's just scroll down quickly. Okay, thank you.
Okay. Right, students, we're going into the last part of the question now, and this is where they ask you now to do the note for property, plant, and equipment. So turn to that page now. The note now for property, plant, and equipment. And in the note for property, plant, and equipment, I am now going to complete this section here. Let us first of all discuss this note. For each non-current asset, each portion of your property, plant, and equipment, you must have a column for it. So you can have a column for vehicles, equipment, land and buildings, furniture, whatever the question tell you makes up your property, plant, and equipment, you will have that indicated there. Now, this note consists of 3 sections. The first 3 lines that you see there, carrying value at the beginning of the year, cost at the beginning of the year, depreciation at the beginning of the year. That is all on what is the situation in the books at the beginning of the financial year. The next set is called movements, and the movements refers to what has happened during the year. Now, 3 things can happen during the course of the year. We can have additions, which means that we are buying more vehicles or more equipment. Or we can have disposals, and disposals will refer to what did we sell. And then we will have depreciation. So those are the 3 things that happens during the course of the year. You can have additions or disposals or depreciation. The additions must be shown at the cost price, but your disposals must be at the carrying value. Disposals, you must show that at your carrying value. And then, of course, you will have the situation in the books at the end of the year. You want to know what is carrying value at the end of the year, cost at the end of the year, and accumulated depreciation at the end of the year. So the note consists of beginning of the year, during the year, end of the year. Let us complete this note quickly. The cost price of your vehicles at the beginning of the year was 360,000 rand. And the accumulated depreciation was 104,000 rand. That was the situation in the books of the business at the beginning of the financial year. And your carrying value is the amount of 256,000. Carrying value is cost minus accumulated depreciation. Now we're going to focus on the movements. What happened during the course of the year? There were additions, and we bought more vehicles for 160,000. We have sold vehicles, and that is under your disposals. Now remember, we disposed of a vehicle which has cost us 140,000 rand, and accumulated depreciation written off on the date of the asset realization was 69,000 rand, and your disposals at carrying value, you put in brackets 71,000 rand. That is the value, the carrying value of the asset that was sold. Your depreciation expense for the year, remember we had depreciation of 44,000 rand on the old existing vehicles. Then we had 21,000 rand on the asset that we have sold. And we've got 16,000 rand on the new vehicle. And your depreciation expense for the year is 81,000 rand. That was the amount that we transferred to the profit or loss account, the expense for the year, 81,000 rand. Next, we are going to focus on what is happening at the end of the year. What is the situation in the books of the business at the end of the year? Go to your vehicle account, your ledger account. Can you see that? We started with 360, we bought one for 160, we sold one for 140, and what will remain, the balance at the end of the year, is 380,000. So in your note, if you want to know what is the cost at the end of the year, It is 380,000 rand coming from the ledger account, the closing balance of your ledger account. And the same applies to accumulated depreciation. Go to your ledger account for accumulated depreciation. You will recall that we started off with 104,000. We increased it first by 21,000 on the 1st of October, then by another 60,000 rand at the end of the year. The asset that we sold, we transferred, and that was 69,000 rand. And the remaining, the balance of accumulated depreciation, the value of accumulated depreciation at the end of the year is 116,000. So in the note for property, plant and equipment, you will show 116,000 rand as the balance of accumulated depreciation. If you want to know what is the carrying value at the end of the year, and carrying value is cost minus accumulated depreciation, you will have the amount of 264,000, which is the 380,000 minus 116,000. And that will conclude the note then for property, plant and equipment. Any queries or any questions on that one?
Yes, sir. Can the question be phrased in the same way during an exam?
Right. As far as your exam is concerned, they will either ask you ledger accounts or journal entries or the note. It's highly unlikely that they will ask you all three. It is just for explanation purposes here that I have actually given you all three. So, but now this will now be if there was like a normal exam. But you know, we are not going to have a normal sit-down exam. What we are going to have this time around is you are going to have online exams. And your online exams, as you guys may be aware of, it is just going to be a multiple choice exam. Therefore, as far as that is concerned, you must just be able to do calculations for this exam. But remember now, you are taking financial accounting perhaps into next year. And if you take this into next year, then you must be able to know how to do this stuff properly, because it could be that next year we are not going to have an online exam, but a real sit-down exam. Does that answer the question?
Yes, sir. Thank you.
Okay.
Just lastly, in this last account that we did now, right? Yeah, I see us for vehicles and equipment, right? Is it possible to ask us a question regarding both vehicle and equipment, to do it like in
Yes,
this one?
and also land and buildings. Remember, this is the note for property, plant and equipment. So all your property, plant and equipment goes into this note, whether it is land and buildings, whether it's furniture, whether it's equipment. In the answer sheet, I have just made provision for vehicles because we have only worked with vehicles.
Okay, thank you.
Okay, right. Guys, let us continue now and let us take a look at the activity that I've got there for you, which is coming from a past paper. And this particular question that we are going to focus on is the November 2013 paper, the question paper for November 2013. Let us see how far we can get down with that particular question. All right. So it is a business called Mr. T. Bonsai, who runs a small renting business now from his home. Go to your required, which is on page 7 of your notes, and I ask you there, prepare the property, plant and equipment note for the financial statement on the 31st of December 2012. And then the second part of the question, they ask you, do the statement of financial position. In the remaining time that we've got, I am just going to focus and work through the note for property, plant and equipment. And for that purposes, you are going to focus for me on the following additional information. You, under your additional information, just focus for me on number 5 and number 7 and number 8. Number 5, they tell you equipment with a cost price was purchased on the 1st of July. Installation cost is 1,500 Rand. And on the 1st of September, a vehicle with a cost price of 5,000 Rand purchased on the 1st of January was sold for cash. So I am quickly going to take you through that particular question. I just want to copy that quickly in here, and then we can attempt the question. So as far as the question is concerned, I am just going to go back now to that question. Right. So in this question, as far as our non-current assets is concerned, we have got land and buildings, vehicles and equipment. So when you do the note, you will make provision then for all 3 of those non-current assets. I just want to split that quickly. And you will make provision then for land and buildings. You are going to make provision then for your vehicles. And you are going to make provision for equipment. And now, based on the information given to us, I am now going to complete this note now. Right. Let us focus quickly on the land and buildings. The land and buildings at cost is an amount of 273,560. And we have got no further information on that. So to complete the note now, we say cost therefore is 273,560. There's no accumulated depreciation on our land and buildings, which means that the carrying value is also 273,560. We've got no further information. Nothing was purchased or sold on land and buildings. Therefore, at the end of the year, the cost is still 273,560. No accumulated depreciation, and your carrying value at the end of the year is an amount of 273,560. Any queries on the land and buildings? Aiden, where do I find the notes? It's the same place like in the last 3 months, eh? Okay. So you must just go, if you go on to...
But I don't see that what you were saying, sir. Sorry. You were saying that it is November 2013 paper. I don't see it.
Yes. Okay, go to your notes, and it is on page 6 in your notes.
Page 6 in my notes.
Just make sure you've got the notes.
I'm checking now.
Got it? Okay. We continue.
Yeah. Thank you.
Right. Any questions on the land and building, students? Right, we continue. I'm going to focus now on the equipment quickly. Your equipment, in your question paper, they tell you the equipment at cost amounted to 40,000 Rand, and the accumulated depreciation on equipment is 5,500. But now, your accumulated depreciation, they give you a date there, and your accumulated depreciation, the date on the 1st of January 2012, which is your opening balance, is 5,500. But your equipment, the 40,000 Rand that you see there, that is the balance as at the 31st of December 2012. So that is the cost price at the end of the year, 40,000 Rand. Because if you go back now to page 6, you will see there the balances, those are the balances as on the 31st of December 2012, which is the balances as at the end of the year. They also tell you that under number 5, sorry guys, that the cost price, equipment with a cost price of 9,000 Rand was purchased, and the installation cost thereof was 1,500. So your additions must be the amount of 9,500. Remember now, the installation cost is part of the cost of the asset. Therefore, the cost price of the asset would be 8,000 Rand plus the 1,500 Rand installation fees. So, if your cost is 40,000 Rand at the end of the year, and during the course of the year, you bought more equipment for 9,500 Rand, it means that you started the year with equipment of 30,500 Rand. All clear on that one? In your list of accounts, the 40,000 Rand is your balance at the end of the financial year. During the course of the year, you bought additional equipment for 9,500 Rand, which means that you must have started the year with 30,500 Rand. Please go back to the screen. I'm going back to the screen. So if I'm going back to the screen there, the equipment cost price at the end of the year was given to you. So you put in at the end of the year 40,000. Your cost price at the beginning of the year must therefore be 30,500 because you started off with 30,500. So we can now complete the carrying value at the beginning of the year. And the carrying value at the beginning of the year, remember, is now cost minus accumulated depreciation, and that will give you 25,000 rand. Cost price of 30,500 minus 5,500 of accumulated depreciation. I am now going to complete my depreciation expense for the year. For equipment, there was no disposal. And I am now going to calculate my depreciation expense now for equipment. Just want to make it a little bit bigger. To calculate my depreciation expense now for the year, I will say depreciation must be calculated. And if you go to number 8, they tell you that the depreciation on equipment is 10% per annum on the straight line method. So now you say you started the year with old equipment. And to calculate the depreciation on the old equipment will be 30,500. And you multiply that now by 10% times 10 divided by 100. And that will give you a depreciation expense of 3,050, 3050. But we have also got new equipment that was purchased during the course of the year. And if you want to calculate the depreciation on the new equipment, remember it was purchased for 9,500. We depreciate that by 10% for the year. But the new equipment was purchased on the 1st of July. Therefore, you must only provide for depreciation for a period of 6 months. And the depreciation on that will, of course, then be the amount of 475 rand. So if you must now provide for the depreciation expense now on your equipment, into your note, depreciation for the year, the depreciation will then be 3,050 plus 475 rand. And your depreciation expense for the year, depreciation expense for the year is therefore 3,525 rand. That is your depreciation expense then on your equipment. So if you want to know what is the value of accumulated depreciation at the end of the year, we started off with accumulated depreciation of 5,500. We have provided for a further 400. Now, wait, I am so wrong here. Further 3,525 rand of depreciation. So your accumulated depreciation at the end of the year, my calculation is correct. Your accumulated depreciation at the end of the year is 9,025, resulting in carrying value. Your carrying value at the end of the year is therefore 40,000 minus the 9,025, and that will give you 30,000 carrying value, 30,975 rand. And that will conclude the column then for equipment. Right, can I just please attend to Nkosinati's question, please? I am still confused on how we got the cost of equipment. I don't know whether you are referring to the equipment that was purchased during the course of the year. And if you are referring to that equipment that was purchased during the course of the year, it is clearly stated to you under number 5 that we bought equipment for 8,000 Rand and there was installation cost of 1,500 Rand, and therefore the cost of the new equipment purchase is 9,500. It's the cost plus the installation cost. That is 9,500. If you are referring to the opening balance that I have got there as 30,500, you need to understand that in your list of accounts, in the question where they gave you equipment balance as 40,000 Rand, that is the balance at the beginning of the year. Okay? Right, okay. Okay, I can see you now. Right, so you are referring now to the opening balance. How do we get the opening balance? Right. The 40,000 Rand that you see in your list of accounts is the balance at the end of the year. So during the course of the year, we bought stuff for 9,500 Rand. So now you say 40,000 minus 9,500 will give you 30,500. So we started the year with 30,500. We bought another 9,500, and that is why our closing balance is 40,000. All okay? Rosanati? Right. Students, that will conclude my session with you guys. You must still complete that question, bring into account the vehicles. I will immediately after, within 5 minutes, I'm going to upload the solution then to this question. So please work through that. And then this is the end of my discussions with you guys and all the lectures. And I wish you guys well for the exam. Please, your exam is way, way, way back. It's only on the 3rd of December now, but remember, you must work constantly on your accounting, even though you are writing other subjects. Please stay focused and do some work now up until the 3rd of December, which is your exam date. If there's nothing else, I am going to close now for the day. All good?
Sorry, sir.
Yes, Timothy?
Well, for the rest of the curriculum, there's a lot more topics. Do we need to study that on our own, even though that you're not gonna give us online lectures and stuff?
That is correct. Unfortunately, that is for your own self-study.
Okay, I'm sad about that, but that's fine.
Okay, unfortunately, I can't help you more. Okay? Anybody else? Right, guys, enjoy the rest of the afternoon.